Good morning, ladies and gentlemen. My name is Greg McLosky from ForexLive.com. This is the morning Forex report for September 15, 2022. We just had a data dump in the U.S. Let's take a look at it. In the U.S., we had a lot of economic indicators come out. Retail sales came in at 0.3%. That was higher than the 0.0%. But if you look at some of the other details of the report, they were mixed. Some were lower, some were higher. So overall, mixed report for that. The Empire Manufacturing, Philly Fed manufacturing indices, both regional indices, also offset each other. One was stronger, one was weaker. We saw initial claims move to the downside, which is always good, better for employment, and continuing claims also moved down. So good, strong employment remains in place, and we saw import prices come in around as expected. So a lot of mixed data. We're seeing the U.S. stock market trade mixed as a result in pre-market trading, and we're seeing yields come off of their high levels. They were up around 7 or 8 basis points. Now we're seeing them up about 3 or 4 basis points across the curve, which has the dollar moving a little bit lower here in early New York trading. So let's take a look at the euro versus US dollar to start off. And as you can see, the euro is trading to a new session high. And in the process, we moved above the 200-hour moving average. That 200-hour moving average held resistance in the London session. The market moved back to the downside. On the downside, by the way, we held at the lows ahead of the 99.515 level, going to the daily chart in the euro versus US dollar level represents the low price from July 14th back here, and yesterday the price came down to that level as well and found support buyers in the Asian session. Today we're seeing the support buyers come in the early London European session against that level, and saw the price move up to the 200. So back above the 200-hour moving average was somewhat positive. We have this swing area and 50% retracement of the move up here as the next upside target. The swing area has different swing highs and lows through here. Yeah, we did move above it. But most, you can sort of blur your eyes and see this as a ceiling area. Also near the 50%, we need to get above those levels and above the 100-hour moving average of 1.0047 to increase the bullish bias for the euro versus US dollar. Traders will now be watching the 200-hour moving average as close support. We found it as resistance here, and so now we moved above it. So now we're looking for it as close support. Can it stay above that level, keep this momentum going? The buyers making a play. We'll see if they connect and keep their control. If we move back below it, then we're back into the range. It's sort of looking like this yesterday, where we could head back down below the 61.8 point and go back down to test the 99.51 level on the downside. That's how I see it for the euro versus US dollar as the market continues to chop. In the dollar versus yen, recall from yesterday, the price moved up to test the high price from last week. That was just short of the 145 level, and the Bank of Japan came in and asked for rates, which is indicative of potential intervention. That may put a lid on the dollar versus yen going forward, but it doesn't necessarily mean that we're going to go crashing to the downside. As you can see yesterday, with the price held support against the 200-hour moving average, a risk-defining level. And we did the same thing in the Asian session here today before moving modestly to the upside. We did come back down and test the 100-hour moving average and 200. Those moving averages are starting to converge as the market starts to trade up and down with this fear of intervention up at the top side, putting a lid on the pair. But as you can see, the 100 and 200-hour moving average is trying to hold support. If we move below that level, we have this swing area through here, where we had a swing low and swing lows through here, and the 200-hour moving average getting in the way. The market moved down. So that area would need to be broken, and then the 38.2% retracement. If we go back in time and look at this swing low right here, this move to the upside, this trend move to the upside, the last big trend move to the upside, the 38.2% retracement held support last week, and it also held support in trading 2 days ago. That would be Tuesday's trade, and market moved to higher. So on the downside, get below the 100, 200, the swing area, and the 38.2% retracement, and those are the targets on the downside to increase the bearish bias in the dollar versus yen. Let's take a look at the sterling versus US dollar in trading yesterday. We saw a rebound to the upside. We saw the price move up to the 100-hour moving average and also this swing area through here. The inability to get above the 100-hour moving average gave the sellers the go-ahead to push back below the 200-hour moving average. That's the green line in this chart. And we've seen further selling pressure in the session here today, but seeing a rebound off of the data, I guess, today with the weaker dollar, the lower yields coming into play. This 114.95 level I had earmarked just because it was this low from September 1st. We tried to hold support here and then fell below it here, tried to use that as resistance, and then moved back to the upside and again tried to hold support here. Up and down price action, admittedly, through here above and below that 14.95 level, but you know, sometimes you pick these levels and sometimes they work and sometimes they don't. But we'll still watch it here, especially after the dollar sold off. The sterling versus U.S. dollar moved higher. If we can re-establish support at this level and start to move back toward the 200 and 100-hour moving average, that'll be a little bit of a clue for the buyers are taking back a little bit more control. The dollar versus Swiss franc in trading on Tuesday this week, the price came down, tested the 200-day moving average, moved up to the 100-hour moving average. It's the blue line in this chart, and then traded sideways above and below the levels in trading yesterday. I earmarked this area around the 38.2% retracement and these swing highs and high yesterday, and the market tried to hold resistance against that late in the day. We moved a little bit above it, and you can see we tried it again in the Asian/early European session here, but failed. And once the price failed on these two breaks above here, the buyers got frustrated and started to rotate back to the downside, falling back to this swing area: swing high, swing high, swing high, swing lows, swing lows, swing lows, swing highs, so on and so forth, back down to that swing area, and the market found some support. We are below the 100-hour moving average, which will be our close resistance and perhaps this swing area as well, but stay below the 100-hour moving average now keeps the sellers in control, and get below this level through here increases the selling bias for that currency pair as well. The dollar versus Canada continues to find a ceiling up here between the 132.07 to 132.218 level. That was yesterday's high, and the market's has since come off a little bit on the 4-hour chart. This what it looks like: high. Lots of highs around the 132.07 level. On the downside here, watch this level through here, 131 to 131.39. The low prices from yesterday stalled against that area. This is a 4-hour chart again, and today we're trading in between both of these levels in sideways action. This is what it looks like on the hourly chart. Lots of ups and downs with the defined ceiling in our swing area through here to get to and through on the downside for that currency pair. So that's a look at some of the major currency pairs. We'll see how the day progresses. We have stocks again trading mixed, getting a little bit worse now as the Nasdaq index is down around 43 points I'm seeing, and the S&P index is, well, it's down a little bit as well. It's down around 8 points currently at the moment. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.